Hey, good morning. This is Mayor Valensky with Driving Markets. Sorry for the late broadcast. I hope you're all well. Okay, quick caveat. I'm not an investment advisor, not a financial advisor. Anything said in this piece is purely an opinion, and therefore anything you make or lose, that is your decision and not based on what is said in this particular broadcast. Okay, so let's have a little bit look at where we're at with financial markets before we go into a bit more detail. So the markets are treading water at the moment. They're pretty steady. They didn't move up that much. There wasn't really much happening. They're waiting some economic news and some corporate earnings news, which is out this week. Obviously, you've got today and tomorrow the Federal Open Market Committee, where the Federal Reserve is going to decide where interest rates are going in the US. That's a big guide to global markets and to global interest rates, with odds-on favourite that they're going to be increasing rates by 75 basis points. However, there is a slight chance, and in my opinion, they could do this. They could increase by 100 basis points in order to really attack inflation. That would be an interesting scenario because that could actually boost the markets on the back of more certainty from the Fed in fighting inflation. So, an interesting scenario, something to watch. Obviously, the results come out on Wednesday evening, and we can see exactly what the interest rates will be and what opinions are regarding these interest rates, and also obviously the accompanying statement that comes with that interest rate move. So that's regarding interest rates. That will have an impact obviously on the UK and also have an impact on foreign currency. The dollar will obviously strengthen on the back of any bigger than expected interest rate rise. The dollar's been the whole year in one direction, which is on the way up, and that's had a big impact on corporate earnings and obviously profitability with other companies, whether in Europe or whether in the US. It's something to take into consideration. Now, also, what else do we have? Well, I want to talk about Snapchat. I know everyone's talked about it, it's already been all over the press, etc., etc. But let's just have a little bit more detailed look at Snapchat. The shares are Snap. They've been down last week more than 39%, and they've come off over 88% from the all-time high, which I think was around about last September 2021, if I'm correct. I could be wrong, but the all-time 88% off the all-time high. Now, what does that mean? It means that Snap's lost direction. Okay, it's not getting the media revenue that it actually needs in order to boost its corporate earnings. And now Snapchat is a indicator and a barometer and a guide as to where the other media companies are going. And the next suspect media company, you're not going to agree to this, you might shout, you might say no, impossible, is actually Facebook. I think Facebook and Meta could be also on the way down following Snap. There's a big competition, there's a lot of competition out there for marketing revenue and advertising revenue, and the market's very, very tight. In other words, there's not a lot of liquidity out there, and the companies are pulling back on spending on marketing. So there's a lot of players fighting for a small bit of revenue. And I think Facebook is going to be the next Snapchat. I think it's going to go down, and I think it's going to go down significantly once it proves and once it shows that it cannot cope with reduced marketing revenue, advertising revenue, because that's all it gets is advertising revenue. That is its source of income. And once you go into a recession and the economy starts to contract, which they're doing, then Facebook is going to be one of those victims and going to be feel the full force or the full effect of a downturn and economic downturn. Okay, so I would put money on, I reckon Facebook is going to fall to around about $100. Now the big question is, when's that going to happen? Okay, so I'm not a prophet, I can't tell you categorically it's going to happen in the next week, month or 2 months. I would suspect that by the end of this year you're probably going to see Facebook anywhere between $100 and $115 a share. And one of the reasons is because in order to avoid recession you've got to have liquidity, and there's just no liquidity there. With the collapse of the cryptocurrencies and obviously the collapse of the high-tech sector, the high-risk sector, there's been a lot of money pulled out and a lot of money being lost. So liquidity is very, very low. Without liquidity, you ain't going to get a bull market. What's supporting the market at the moment is full employment, because there's a major lack of shortage of labour from the corona outbreak and all of the changes of labour and working patterns, which has caused a major lack of manpower within the marketplace. So labour and employment is high. However, once that is impacted or affected, then you're going to have a much more serious situation regarding a recession and moving economies will be going down as opposed to up. So that's something to keep an eye on. So the overall view is that Facebook is definitely going to be the next one that goes down. The high-tech sector is going to continue laying off staff and cutting back on employment as across the board, as we've seen with Microsoft, Apple, Google and Facebook. Those are just some of the companies that have laid off staff and are reducing their recruitment drive. And that's overall it's going to feed into the numbers going forward on the employment reports. As regards house builders in the States and in the UK are suffering tremendously from the higher interest rates because there is less money around there to buy houses. It's become more expensive to get onto the property ladder. Even though house prices are holding themselves up there, the builders are suffering from the rising interest rates, and anything associated with running your home is also, all those companies are feeling the impact of the higher cost of living, because the consumer, when it comes to maintaining a house, is going to spend less money. That's the overall background. Started off with Snapchat and sort of moved on to other areas. As regards FX, I think cable is probably a buy. Dollar pound looks like a buy in my opinion. The euro is a sell. I don't think the euro is going to have much future in the next few months. It looks like a sell. As far as Bitcoin is concerned, Bitcoin has established a good solid base at around about the 20 to 22,000 level. However, it can't seem to breach above the 24,000 level. It needs to breach above that if it's going to move up to new highs or short-term highs. Okay, so keep an eye overall. I do expect the markets to be particularly volatile with the interest rate decision coming on board tomorrow evening. This is Meir Velensky with Driving Markets. Have a good day.